Welcome back to Bazaar Morning Call. We're going to focus on two stocks now. Mahindra Logistics with Bajaj Electricals has announced a project called Samriddhi for integrated logistics services. Now, this deal is one of the largest deals in the Indian logistics industry, and the size is in excess of 1,000 crore contract value over the next 5 years. But to understand the granularity of this deal, Rampraveen Swaminathan, the MD and CEO of Mahindra Logistics, and Anuj Poddar, the Executive Director of Bajaj Electricals, joins us now. Gentlemen, thanks to both of you for joining in. Mr. Swaminathan, I want to start with you. Just can you tell us a little bit about this, the benefits out of this deal?
Good morning. The strategic intent really has been to build a resilient and agile and cost-effective supply chain design for Bajaj Electrical. And through the program, we've done a full redesign to build a consolidated logistic network, which includes storage optimization, fulfillment improvement, and transportation management. You're leveraging a lot of technology in the entire solution design. So through the program, obviously, we get a significant growth in our fulfillment logistics business, but we'll hopefully deliver significant benefits to Bajaj Electrical as well, both in terms of customer service and cost optimization.
Mr. Poddar, good morning. You're going to pay 1,000 crore, that's almost 200 crore every year. What are you expecting to garner?
Morning, Lata. I think this is just one step of all the various strategic initiatives we've been taking over the past couple of years to transform our performance as a company. I think logistics is a very, very core activity for us. For us, firstly, the strategic objective on this is to make our logistics function world-class and best-in-class. As Ram mentioned, it's to provide better customer service, more agility and flexibility in our logistics network, deploy the best of technology that I'm sure Mahindra Logistics, with their expertise, will bring to play, set up the best warehouse facilities. We also have a strong focus on green and sustainable practices through this, both at the warehouse and transportation level. And lastly, but equally importantly for us, is the financial savings. We do expect to realize financial savings over the coming years through this, through the efficiencies that we derive through this partnership.
Anuj, see, I'm not even taking FY21. 9 months. I'm taking your FY20 numbers. Your EBITDA is 205 crore. And that's the price you're going to pay. So how much more will you make out of this?
So, of course, we already incur logistics costs today, so we're not going to pay anything more. We will intend to save on the costs that we pay today. So roughly, we do incur about 200 crores of logistics costs. I'm not giving, it's not an exact number. More or less, the cost is in that range already. I don't think the benefits will come in the year one, because this year one, which is FY21-22, will be the transition year when the logistics will transition over to Mahindra Logistics. But I think from the following year, the benefits will start coming in. So we will start seeing a saving on the money going forward.
Okay. Rampraveen, I want to ask you, if you have cracked it for Bajaj Electricals, for you, is this just scalable? I mean, do you see clients lining up?
Well, I think our value proposition always has been focused on creating integrated and customized solutions. So, and we've been working on that journey now for a couple of years. Bajaj is the partnership with Bajaj is an important step in that journey. We've been doing that before, and we obviously believe that it's scalable and something which you can grow as we execute to our long-term vision.
Actually, I wanted to pose this question to Anuj. What kind of cost savings? You said in year one you may not see much of the benefits, but year two onwards, what would the cost savings be? And eventually, what would that do to your margin performance? I mean, how would that grow?
So, today our logistics cost as a percent of revenue is anywhere close to 6 to 7%. I think there's enough room to optimize that, and that's the objective of this partnership. I would expect that anywhere between 1.5 to 2 percentage points expansion of margin should come off this over a period of 3 to 4 years. That said, and as I've been sharing with your channel in the past too, we do intend to start investing further on brands and products. And therefore, all these cost savings and efficiencies that we create out of other alternatives will go towards helping us beef up our investments. But, I think out of other alternatives will go towards helping us beef up our investments. But, I think the larger story here is also the inventory, optimization and working capital optimization that we're working towards. So I think a more efficient logistics function will also have spillover effects on inventory optimization. And I think better customer service, better agility in the marketplace will in some way or manner also boost revenues, because as you become more efficient, speedier to that, the trade-offs or the other spillover effects are hard to quantify, but those do come into the company. The last point I would make really is, it's just about using technology, that will make the data, all of that come much better to us, our distributor management system, our vendor management system, transport management system. So all of these are hard to quantify, but I think that's the core purpose of this. It's far more strategic than just to look at the pure cost savings of this one.
Okay, Rampraveen, I wanted to ask you how the money comes. Is it 200 crore every year? Is it some upfront payment? And is there any upsides in the contract?
I think as Anuj mentioned, this is a multi-year deal, Lata. So we are going to take the better part of the first half of the year definitely to implement this fairly significant redesign of the supply chain network. So we should start seeing scale up really in the second half of FY22 and then ramping up over the next 4 or 5 years. It is a contract where we have guaranteed delivered savings to Bajaj Electricals, so we will essentially be able to ramp up as in line with their volume and growth strategies as well.
No, your investors will want to know how is the money coming to you. Is it coming 200 crore every year, or is it tied to some milestones? Are there upsides and downsides to this 1,000 crore?
Yeah, so sure. I think, as I said, firstly, the money will start coming in from the second half of the year in a material way, the second half of FY22. As Anuj mentioned, their run rate of spend on logistics is roughly around 200 crores a year. So we should be able to be booking that level of revenue on a consistent basis from FY23 onwards.
Is this, Mr. Swaminathan, this question is to you. Is this an exclusive agreement, or can Mahindra even service Bajaj's competitors as well?
At this stage, I think the contours of the deal are fairly strategic. So we have structured in a way where we protect, obviously, the strategic interests of Bajaj Electrical as well as Mahindra Logistics.
Okay, fair point. I didn't quite get the answer, but I thought that if you have cracked it for a company like Bajaj Electricals, you will be, for instance, asking, other consumer durable makers or maybe other FMCG companies. Basically, you would have cracked logistics for, some consumption company. Would there be any exclusive arrangement? An exclusive arrangement would be defeating for you, isn't it?
Right. I think the broad design principles and the solution capabilities which we have already built and we are deploying for Bajaj is something we will leverage for other customers as well, who need fulfillment logistics solutions. So that could be FMCG, it could be durables of different categories. It could also be fulfillment logistics for other sectors and verticals. So definitely scaling this up into other clients is very much part of the game plan.
So what are your own revenue targets, Rampraveen?
So I think our long-term vision over the next 5 to 6 years is to grow to be a 10,000 crore company. Building this value proposition around solutions is a very important cog in that wheel of growth. So we do expect we expect this to be a big part of that growth engine towards that long-term vision.
Okay, 10,000 crore company. Anuj, what about you? What would the long-term potential be for the company, and what are the revenue targets that you'd have?
I know you'll have to get an answer on these numbers. Like I've said in the past, I don't know the specific numbers, but our objective remains to grow at strong double digits and hopefully ahead of industry or average industry numbers. Just one point I want to add to your questions to Ram. This partnership has not happened overnight. It's been 1 year in the making. There's a lot of homework that's gone behind this, a lot of diligence, a lot of network optimization. We've done a lot of simulation on this, and it's a very customized, deal structure that is being worked out between Bajaj Electricals and Mahindra Logistics. So it's not really easily replicable in that sense when you're doing something so integrated and so significant. So it is, for me, very happy with the process that has gone into the making of this deal, and that gives us greater confidence on what to expect ahead.
Okay. Rampraveen, you were speaking about e-Del vehicles, right? How many e-Del vehicles are you rolling out? I would assume that you would be depending on M&M for that. And what, is your target in terms of revenue from this entire e-Del business?
So the electric vehicle-based cargo logistics service we launched, is something which we aim to deploy around 1,000 vehicles in the short term, which is through FY22, right, in 14 cities. It starts with a three-wheeler platform from M&M, but it's something which we are looking at expanding into four-wheelers and two-wheelers at a service line level over the next 3 years. I've said this before, Lata, that I think we expect probably 100 crore plus revenue right over the next 2-3 years from that business.
Okay. I don't want to waste this opportunity with Anuj Poddar. Anuj, what is business looking like? I mean, we are now into almost 2/3 of the fourth quarter. Until now, we would have attributed a lot of the demand, the very good performance in Q3 to pent up. How have Jan, Feb been compared to Q3?
So, Lata, to be honest, Q4 is looking slightly softer than Q2 and Q3 did. And I think that's general or common across the industry. But the two biggest challenges that everybody is dealing with right now is one is the fuel price cost and the cost implications of that. And second is the commodity cost. The commodity costs are not cooling off at all. It seemed for a couple of weeks in Feb that we might have some cooling off, but if you look at copper, aluminium, even ABS, they all, trending very high. So I think our challenges are a little more on the cost side. And if I may say so, the fuel cost increase, maybe this logistics partnership would not have come at a better time for us, because hopefully every rupee we save is going to be more than welcome for us.
And what is it? Are you taking it on your margins or are you passing on costs?
We have taken a price increase, but price increase in a market which is not as buoyant as it was last quarter. So we have to be watchful on that. So we took one round of price increase in January, but it's a little early for us to take a second round, though the commodity prices have increased. So we're going to wait and watch to see how that balances out.
So any more deals in the offing, to sort of help combat these higher costs due to commodity prices?
Well, I mean, deals of this nature, strategic deals will only happen once in a while. But on a daily basis, operationally, one is always trying to deal with these situations. And also sometimes, one needs to sift through what's a short-term issue, what's a long-term issue. Quite frankly, when the commodity price is hurting all of us right now, I would put that in the bucket of a shorter-term issue. So, these are maybe months that you have to tide over through some operational tactical means. Otherwise, yet staying focused on the larger strategic building blocks, which is what we're really more focused on.
Yeah, just final question. We are heading into market opening. Rampraveen, when do we hear about the next big contract?
I think the structures like this are long-term partnerships and they take a lot of work. I think as Anuj said, this project itself took 10 to 11 months of collaboration, especially since we use common building blocks, but we actually customize the solution very specifically to each client. So there are obviously a pipeline of opportunities we're working on, but it will be, there's nothing which I'm in a position to talk about from a near-term perspective.
Oh, right. Well, we'll leave it at that. Thank you very much, Rampraveen and Anuj Poddar, for joining us with some of the details and your expectations from this strategic partnership. We'll quickly run you through the past financials of both companies. Let's start with Bajaj Electricals past financials. That's the revenue picture. It's obviously FY20 has been a problem for everyone. EBITDA trends will come up, and then you will have the profit after tax trend. You will get similar bar charts for Mahindra Logistics, just coming up for you in a minute. That's Mahindra Logistics revenue chart. For the past 5 years, you will have EBITDA margins and the profit after tax as well.
Okay, so that's Mahindra Logistics and Bajaj. But let's get back to the market.